Hey traders, in this video I'm going to show you how to predict the directional bias of the market and how to follow price action properly. As traders, our goal is to have some understanding where the market is heading. Of course, no one knows every single time 100% where the market is heading exactly, but us as price action traders, if we're going to use price action rules, we're able to gain an edge and to understand better the directional bias of the market. Every single candle on the chart tells us a story. It is a representation of bull and bear analysis, and our job is to understand exactly what these candles are telling us. Now you can see that I have a lot of key levels already prepared on my chart. I want to mark the low of the day support, the high of the day resistance, because this is looking like a trend range, and if I'm going to be trading the trend range for the rest of the day, I want to know where the extremes are, because I want to pay attention once prices reach these extremes and what is the target for prices to go to. Also, as you can see, I have a lot of channels being present on the chart, and this is pivotal. Because on every single price chart, there are always channels being present. These candles are not moving randomly, and there's a Trendline rule which says after break of a channel, we expect new extreme. So we have downtrend working lower with the break new low, and I want to mark my new low so I know what is the current situation in the market. We're pushing above the EMA, and we have series of higher highs, higher lows, bullish uptrend. So the directional bias right now is bullish because this channel is in play, and even though we're breaking the channel, the price action rule tells me that I expect new extreme. So I'm predicting still bullish bias. However, even though I expect bullish bias, I cannot just go long randomly. I need to time it properly. As you can see, I'm also drawing the downtrend, the channel for the correction, because this will help me to time the entry properly, because as long as this downtrend is in play, I don't really want to go long just yet. You have a small break and new extreme. So this means that the downtrend played out, and I'm safe to assume that the buyers will come into the market, and we are right now heading to create new extreme. So this is how I'm following the price action, and this is how I'm determining what is the directional bias of the market. We have a higher low, which is quite tempting, but it's still fully below EMA. I would have liked it to see it push above EMA or felt second entry short. It never formed, and market pushed back below the EMA. So this is congestion, consolidation. We have flat EMA, a lot of price swings up and down. So I need to mark it, the edges of the congestion. I'm just going to copy it, put it at the top, and I can see that we are trading a small trend range. We have a break, new extreme even for this downtrend, and notice we have large two-legged pullback. Market likes to move in pairs of twos, and because we are trading a small trend range rules tell us that we want to buy low, sell high, and because we traded up, we expect for market to create new extreme. We are right now buying low. We have double bottom, but it looks very close to being triple test, sort of like a one bounce here, second bounce here, third bounce here. So this is a first high probability setup because even this downtrend has new extreme. We expect new high. We're buying at the bottom of the trend range, and the downtrend played out. So this is good signal bar and triple test. We expect for market to continue working higher. We have high low breakout pullback confirmation setup, but it's not fully at the EMA, and you're buying very high. We cannot go long. And we formed new extreme. And this is important because the uptrend played out, and right now we're at the top of the trend range. We are at the high of the day important resistance. So this is where I expect all the bulls to take profit and all the smart sellers to start selling. So already I'm thinking bearish, but I want to time it properly. I would like to see felt second entry long, preferably below EMA. Now we have quite tempting lower high above EMA. But the problem is, this is just lower high. It's not a felt second entry long. Sometimes a felt second entry long in trend ranges can form above EMA, close to resistance. So in that case, you could make a case for going short here, but this is a little bit more advanced because next time you will see a similar structure like this, it's a little bit too bullish. You will get trapped. Because it is still above EMA, I feel it's a little bit more aggressive, but the idea to sell here is correct. Why? Because the directional bias told us we have a break new high, and we are right now more bearish, and market is continuing working lower. So I want to predict where the market is heading. I'm going to draw a channel. We're closing outside the channel, so I expect for this downtrend to create new low. My bias is bearish, and I want to see high probability setup. However, we never got it because market already created the new extreme. So what I have to do, redraw the uptrend. So you can see these candles, if you analyze it closely, they're always working within a channel, and you're able to predict the movement of these candles. Now, Notice I have a tight channel with the breaking low. You can also make a case. What about this wider channel without a break? And the reason why I'm drawing the tighter one is because there is no bullish bar pullback on the way down that would create swings indicating a downtrend to me, because downtrend should have lower highs, lower lows, but there are no pullbacks, there are no swings. This is just a very long slim leg down, kind of like a break, a new extreme. So this is why I'm selecting the tighter channel. Either way, if you're not sure which channel is correct, because here it's very close, you're going to observe the EMA. You have a second entry short, but you cannot take it. You're very far away from the EMA, and it's going to be pivotal how EMA is going to react. If the EMA is going to hold and you're going to see rejection, you may think, okay, there's a wider channel and I'm more bearish. But if you're going to push above EMA, this will confirm your analysis. Okay, we have a break, new extreme. So use the EMA. EMA will a lot of times tell you what you need to know is the deciding factor. Price action is working higher. This means I need to adapt. Okay, I'm going to redraw a wider channel. Why? Because this structure is too big for just this little channel to take it completely into consideration. There is a bigger uptrend developing. Once again, I want to predict where the market is heading, and I'm going to do this by following channel. I have a new high, first entry long, I can go long, and we have a second entry long. This right here is a second entry long off the trend line and off the EMA. When I'm watching this live, I'm already trying to eyeball a potential support, triple test, quadruple test, because this second entry long is still quite stacked. It is still quite congested. You can see a lot of stems here. There's also a gap between the body and the EMA. You would have preferred this second entry long closing a little bit lower, so you're buying low of this congestion. Because it's closing so high and it's so stacked, I can only mark it more aggressive. It is a bit more risky. The tier 1 signal bar here is really good. It shows momentum, but it's a little bit iffy. Either way, your two-legged pullback at the key entry point. We're breaking the channel, but I'm not panicking. I'm not expecting market to reverse. I'm thinking the market is going to get new extreme, just like I did at the very beginning of the session. Simple price action. I just need to time it properly. For this reason, I'm drawing the downtrend. Okay, we're pushing above EMA, can we get high-low confirmation setup? We can, but the high-low is horrible. Bearish doji, I cannot go long. And market is trending all the way down. And this is good, because I can see if I'm going to extend the support, a lot of buyers are coming into the market here, and it form broad two-legged pullback. Market likes to move in pairs of twos, and this is telling me, okay, the sellers attempted twice to reverse the market. Both times they were stopped at this key level, and I expect new high. So my bias is still bullish. I, however, cannot go long here because I didn't get any good solid bullish bar. So once again, I have no other option but to wait for high-low or failed second entry short. High-low, once again, horrible bearish doji. What about failed second entry short? Another horrible bearish doji. So even though I know what the context is and I know where the market is heading, we need new high. Context-wise, the setups are good, but the signal bars are so ugly. You know, I can't unfortunately enter, and market already created new extreme. So what does it mean for us? It means that the bullish momentum depleted, and because we are trading in trend range, you always want to zoom out periodically to remind yourself what you're trading. You can see up, down, up, down, up, down. So I'm really not expecting continuation. I'm expecting instant pivot and reversal, because that's the nature of trend ranges. We have a failed breakout that also reached a new extreme, and we have push below EMA and a lower high confirmation setup. Now the body is still a little bit bullish. I would have preferred had it closed a little bit bearish, but there is decent tail at the top. It's close to EMA. The downtrend needs to get new extreme. So this is a decent lower high. What does it confirm? It's confirming the failed breakout that happened right here. Now, because uptrend played out with the break new high, this is where I'm predicting that the brand new downtrend will start. So I like to make my channel a bit wider, because this feels just like a series of high lows that are on the way up to create new high. And because we're in a trend range, I don't expect for bulls to stay in the market. I expect another reversal, just like it keeps happening every single time. But I cannot go short on a failed second entry long because it's so far from the EMA. We have new extreme, but notice what happens. We are getting rejection here. So this is reminding me breakout pullback. This support, we broke lower, came back, we're testing it. And if it's gonna hold and act as resistance, I'm thinking more bearish. So when I was watching this live, I decided to widen my channel like this to give me still bearish bias. We have overshoot because we have 90 degrees spike down far from the EMA, explaining, okay, this could be overshoot, so I expect stronger momentum. So second entry short would have to look really, really good, or I would wait for lower high. There was no trigger for second entry short. Second entry short form above EMA, horrible bullish bar, but we formed new extreme. So the new high told me, okay, the bull played out, and this is important. Massive push below EMA. Notice what's happening here. This is a breakout pullback pattern. We broke the support, and suddenly it's acting twice as a resistance, and this is important. This will give you bearish bias. This downtrend needs to get new low. This is a resistance. We expect a lower high breakout pullback. If you have good second entry short, you can sell. I don't, so I need to see a lower high confirmation setup. I didn't get it, and we already pushed all the way to micro double bottom. I'm going to redraw a short-term uptrend. Price action is getting very tight. EMA flattening. I expect new high for this uptrend. We have a second entry long and a failed second entry short. But the signal bar is still below EMA, which is quite crucial because we still can get new low. Technically, we only have micro double bottom. So I really want to see above EMA. It worked for a scalp, but unfortunately we can't really take it. Two-legged pullback again. Market is working lower. I need to redraw short and downtrend. So this is what you have to do. Always try to analyze what bigger pattern you're trading, which we are trading a trend range. And in order for you to follow the direction where the market is heading, you have to follow the trendline rule and look for the new extremes. We broke lower. We have small overshoot, which can cause significant correction. I'm going to redraw the short-term uptrend. Your break. You cannot take lower high because this uptrend needs to get new high. This was a massive spike. You're at the bottom of the trend range. An uptrend created new extreme. Market likes to move in pairs of twos. So this is how price action works in trend ranges. But this is quite difficult trend range because the key level at the bottom is not static. At the highs it's a little bit better, but at the lows, you know, it keeps pushing lower, so you don't know exactly where to buy at the bottom. Notice what we have. Two-legged pullback, uptrend played out, indicating, okay, no more bullish momentum. Strong push down, downtrend needs to get new extreme, and this is a lower high confirmation setup of the new low, first entry short, pullback, second entry short. Great signal bar, strong signal bar, closing below EMA, and created new extreme. It is tempting to buy at the bottom because you have a decent bullish bar and you're buying at the support. But this is third entry long. You have a new high, first entry long, second entry long. So this is not really clean high probability setup. It's quite hard to go long here because the key level at the bottom is not fully static. So I would like to see high-low confirmation setup, which we get it here. The signal bar has a bearish body, but you know, it has a very nice bullish tail, but the bar is quite big. You know, I can mark it more aggressive high-low. You can see you almost got stopped out, but your stop loss goes always when you're buying one tick below the signal bar. You're using the price action structure to help you protect your stop. This is why you cannot move your stop loss. It's normal for the market to cause a little bit of a pullback, a little bit of a noise. You're able to survive. You can see one tick below the signal bar, and eventually market continued in your direction. So never move your stop. Just do your analysis. If it fits the rules and you like the setup, just place the order. You don't have to look at the chart. Just go away, come back in 5 minutes if you can't handle the heat. Large two-legged pullback once again. New high for the bullish trend again. You're expecting something you're expecting here. A lower high confirmation setup, or you're expecting a failed second entry long. However, that never formed. Market sold off all the way down here. So this is straightforward. Once you're at the highs and you can see new high, you're looking for lower high or failed second entry long. And at the bottom, high low or failed second entry short. Now, actually, when I was watching this live, I was taking this high low and I took it for 6 tick scalp. I had my limit order 2 ticks back. But when I'm watching back, I can see that this move only looks like a one move down. All of these moves look like a visual two-legged pullback. Two-legged pullback here, broad two-legged pullback here, broad two-legged pullback here, which is a pivotal. This will tell you that you expect pivot. This looks like a one steep leg down. So when I'm watching it back, I can see that I got a little bit lucky with my scalp. Fortunately, it worked for 6 ticks. It was a little bit late, so I was probably supposed to not force it and be down. I'm looking back, you know, this is just strong downtrend, one steep leg down, it's better to wait because there can be the second leg. And there is second leg down, so we have new extreme. And market ended up reversing at the end of the day. This is how we follow price action, and this is how we are trying to predict the directional bias of the market. Market moves in pairs of twos. It's not that obvious to untrained eye, to a developing trader who's not that full experience, but once you become more experienced with price action, you will soon discover that there are two-legged pullbacks all over the place. And in order for you to follow price action accurately, draw these channels, and especially if you're trading a trend range like this, once you have a break new extreme, you expect reversal. So follow the trendline rule. It will keep you on the right side of the market. Today the price action and trendline rule was perfect. I hope you had a good trading day. I'm going to wrap it up, and I'm going to talk to you next time. Good luck with your trading.